Hi everyone, so I've been looking at what's been moving markets and I really can't preview this week ahead without talking about the record highs in Amazon and Facebook shares. I mean, I'm always getting the question, is it too late to buy these kinds of shares when they're already at record highs? But a bit more unusually at the moment, a lot of people saying, why are these shares even at record highs? The US economy is in a bad place, Americans are losing their jobs. Shouldn't that be bad for these companies and all companies for that matter? In fact, when are these markets going to roll over again? It's a fair question and I'll do my best to answer in just a minute. Now, a new thing I want to do this week is just do a quick highlight reel of some of the charts I've been sharing in my daily email newsletter. And by the way, you can see the free subscription link to that in the video description below. So what economic data should we be looking out for this week? There actually aren't a lot of top tier data items this week because it's Memorial Day and the UK Spring Bank holiday on Monday, so a lot of people are taking time off work and that includes the government agencies who are releasing the data. So most likely markets will be moving on other things. Probably top of the list is the souring relations between the US and China again, and any ramifications from that new security law passed in Hong Kong and whether the US actually responds to that in some way. Otherwise, I'm still running with the idea that sentiment data is some of the most important, and so this week it's all about consumer confidence. For me, ultimately, it's all about whether people can actually get back to behaving normally and consuming like they once did. That is obviously a challenge given the shock of the lockdowns and how quickly they go back to spending. That will determine how quickly the global economy recovers from the pandemic. Now, before I discuss these Amazon and Facebook shares defying stock market gravity, can I ask that if you do trade CFDs or shares like Amazon and you're getting some benefit from this video, give that like button a quick ding, it really helps. Now, may I offer my hearty congratulations to anyone who's been buying these FANG stocks since March. That's Facebook, Apple, Amazon, Netflix, and Google. Once again, these shares have been pretty much the only game in town. Now, why is that? Well, these are global businesses and they're mostly online. So Amazon shares, they hit a record high even after Jeff Bezos said he would give all the company's profits away from the second quarter on making its warehouse and supply chain coronavirus proof. Now, presumably sales on Amazon.com will drop if we have a long recession. I think that is a risk to the shares, especially at these high levels, but Amazon is still dominating everyone's shopping habits. It's actually increasing because regular shops are closed and everyone is forced online. So the mega trend of people shifting their shopping online, it's actually accelerating in the pandemic, and that's obviously good for Amazon. Now, in fact, one of the few companies that can actually dethrone Amazon from that online throne is Facebook. In the last week, Facebook introduced Facebook Shops, and that gives the businesses an ability to sell their products directly through Facebook. Okay, Facebook too is not immune from a downturn in the economy. It needs businesses to be doing well enough to spend on advertising, which of course they might not be doing if there is a recession where advertising sales could certainly drop. However, social media use is going through the roof, especially with everyone stuck at home or unable to go to sports matches or concerts, whatever they normally do. And they're going to spend more time on their phones. So if businesses are going to cut their advertising spending, Facebook is probably one of the last places they're going to actually cut. Okay, now time for this new feature I mentioned, the charts reel. Again, this is some of the charts that I've been sending with my daily email called the Market Wrap. Now, gold might be getting all the headlines because of it hitting the 7-year highs, but wow, what about silver? It's up 16% just this month alone. This one was from last Friday. Actually, we called the breakout pretty early. The price reached up to $1760 per ounce in the end before pulling back a bit. This one is the pound. You can see it's breaking down out of its range. The bottom of that range is a line in the sand for me on whether to be short-term bullish or bearish on the pound. Next is the S&P 500 and the Aussie. I sent this out on Wednesday, and at the time of filming, those highs still are not being taken out. They're still holding. So after going sideways for a month, a move up above these levels tells me that risk assets, basically shares and not the dollar, have another leg up to go. This is the Euro Swissy. That 105 level is getting defended by the Swiss National Bank, although they're not explicitly saying so. But the idea here was that It looks like the downtrend could be reversing because of that broken trend line. And that is supported by the fact the euro has been looking better across the board after the news of that Franco-German 500 billion euro recovery fund. This one shows the Nasdaq and the S&P 500 and the Russell 2000. Here the point was to demonstrate that the Russell 2000 has 2,000 medium-sized, normally US-focused businesses. So it's a pretty good reference for the real US economy. The Nasdaq, on the other hand, is all about the big FANG and tech stocks, including Amazon and Facebook. So do you see the difference here? What's happening to the giant tech stocks is not necessarily what's happening to the US economy, which is, of course, losing all these jobs that we talked about at the start of the video. So that's it for this week. Thank you very much for watching the video. Check out LCG on LCG, the Instagram channel, and of course, subscribe to us on YouTube so you don't miss next week's video.